Two empires. Two destinies. One drowned in gold and went bankrupt 4 times in 50 years. The other started with nothing and became the richest nation in human history. 16th century Spain controlled half the world and imported 180,000 tons of silver. Yet by the 18th century it was a fading shadow. Meanwhile, America in 1776 was 13 struggling colonies clinging to the Atlantic coast. No gold mines. No silver mountains. No global trade routes. Just swamps, forests, and rebellious farmers. But within 250 years America held more wealth than Spain ever dreamed of. The difference was not resources. It was wisdom. Because America watched Spain's mistakes and learned every lesson. While Spain confused treasure with wealth, America built something Spain never understood: systems. And that single difference changed everything. This is not just history. This is a masterclass in how nations rise and fall. And why the patterns we see today echo across centuries. When British colonists arrived at Jamestown in 1607, they found no Aztec gold. No Inca silver. Just mosquitoes, disease, and starvation. The first winter killed more than half the settlers. They ate leather from their boots. Some resorted to cannibalism according to archaeological evidence discovered in 2012. Jamestown was not a treasure port. It was a graveyard. Compare this to Spanish conquistadors who walked into Tenochtitlan in 1519 and found rooms filled with gold artifacts. Pizarro entered Cusco in 1533 and seized warehouses of silver. The Spanish stumbled into ready-made wealth. Americans had to create everything from scratch. And here is the irony. This brutal beginning was America's greatest advantage. Because when you have no treasure to steal, you must build. When you cannot plunder, you must produce. Early American colonists did not wait for ships carrying silver. They planted tobacco. They harvested timber. They fished cod in the North Atlantic. These were not glamorous resources. You cannot make a crown from tobacco leaves. But tobacco created sustainable trade. Timber built ships that created more trade. Fish fed workers who built more infrastructure. Each resource multiplied itself. By the 1700s, Virginia was not rich in gold, but it was prosperous in systems. Massachusetts had no silver mines, but it had shipyards and trading companies. The colonies learned the fundamental truth that Spain missed. Wealth flows from productivity, not from possession. Spain measured wealth by how much silver entered Seville each year. America measured wealth by how much it could produce and trade continuously. This was not just an economic difference. It was a philosophical revolution. Spanish colonial policy was extractive. Mines existed to send treasure home. Mexico City and Lima were administrative centers designed to funnel resources to Madrid. Spanish America existed for Spain. British colonial policy was initially developmental. Colonies were meant to become self-sustaining economies that traded with the mother country. This created a fundamental structural advantage. When Spanish treasure fleets were captured by pirates, the entire system collapsed into crisis. When American merchant ships were attacked, Americans built more ships and found new routes. The system was resilient because it was not dependent on a single convoy carrying 1 year's worth of wealth. It was based on thousands of transactions creating value daily. By 1750, British North America had developed something Spain never built. A commercial middle class. Merchants, shipbuilders, traders, craftsmen, farmers who owned property and reinvested profits. These people did not wait for the crown to send them money. They created wealth through enterprise. Spain had nobles and peasants. America was building a bourgeoisie. And that class understood something the Spanish aristocracy never grasped. Capital works best when it circulates and multiplies through productive investment, not when it sits in treasury vaults waiting to pay for wars. In 1791, just 15 years after independence, Alexander Hamilton created the first Bank of the United States. This was not just a bank. It was a declaration of economic philosophy. Hamilton understood that a nation's wealth depends on its ability to mobilize capital efficiently. Spain borrowed from German and Genoese bankers at crippling interest rates because it had no domestic financial infrastructure. It was perpetually in debt to foreigners. Hamilton built American financial infrastructure before America was even rich. The bank could issue currency. It could provide loans to businesses. It could manage government debt systematically. Hamilton also established the U.S. Mint in 1792 and created a stable currency backed not by silver reserves alone, but by the full faith and credit of the government plus its taxing power. This was revolutionary. Spain's currency was only as good as the next silver fleet. If pirates captured the ship, Spanish currency collapsed. American currency was backed by the entire productive capacity of the economy. Farms, factories, ships, infrastructure, tax revenue. Everything contributed to currency stability. By 1800, America had created a financial system that could absorb shocks. One failed harvest did not trigger bankruptcy. One lost shipment did not crash the economy. The system had redundancy and resilience built into its foundation. Meanwhile, Spain was still experiencing the same cycle. Fleet arrives. Debts paid temporarily. Fleet delayed or captured. Immediate crisis and default. The contrast could not be starker. America invested in infrastructure with an obsession Spain never showed. Early Americans built roads. They dug canals. The Erie Canal, completed in 1825, connected the Great Lakes to the Atlantic Ocean through the Hudson River. This single infrastructure project transformed the American economy. Suddenly, farmers in Ohio could ship grain to New York and then to Europe profitably. Towns along the canal exploded in growth. Buffalo, Rochester, Syracuse, Albany all became prosperous cities because of one canal. The canal did not bring treasure. It multiplied productivity. It turned landlocked farmland into globally connected commercial zones. Spain built churches. Beautiful Baroque cathedrals that still stand today as monuments to colonial wealth. But churches do not multiply capital. They consume it. America built railroads. By 1860, the United States had more than 30,000 miles of railroad track, more than Britain, France, and Germany combined. 30,000 miles of steel connecting farms to factories to ports. Every mile of railroad increased the value of land within reach. It lowered transportation costs. It created new markets. It allowed specialization. A farmer in Kansas could focus entirely on wheat because railroads guaranteed he could sell to buyers 1,000 miles away. Spain built fortresses to protect treasure fleets. America built infrastructure to create wealth where none existed before. One strategy defends. The other generates. History shows which approach wins. Between 1820 and 1924, approximately 35 million immigrants arrived in America. Spain never encouraged mass immigration to its colonies. Spanish America remained ethnically stratified, with peninsulars born in Spain at the top, criollos born in Americas beneath them, mestizos lower, and indigenous people at the bottom. Social mobility was nearly impossible. America was chaotic by comparison. Germans, Italians, Irish, Polish, Jews, Chinese, everyone came. And this was not charity. It was strategic genius. Every immigrant brought human capital, skills, energy, ambition. Desperation to succeed. German immigrants brought engineering skills and established American brewing industry and advanced manufacturing. Italian immigrants built infrastructure and brought agricultural expertise. Jewish immigrants from Eastern Europe brought entrepreneurial networks and capital. Chinese immigrants built the Transcontinental Railroad under brutal conditions and established trade networks across the Pacific. Each wave added capabilities. But more importantly, each wave added consumers and producers simultaneously. An immigrant family did not just work. They bought food, clothing, tools. They rented housing. They needed services. Each immigrant multiplied economic activity. Spain saw immigration as a threat to ethnic purity. America saw it as compound interest on national productivity. By 1900, America had a population of 76 million. Spain had 18.6 million. But the difference was not just size. It was dynamism. American population was young, hungry, entrepreneurial, constantly innovating. Spanish population was aging, rigid, stratified by class. One society was a pressure cooker of creative energy. The other was a museum. The Industrial Revolution began in Britain in the late 1700s. But America executed it with ruthless efficiency that surpassed even the British. By 1890, the United States became the world's leading industrial nation. By 1900, American industrial output was nearly double that of Britain. How did this happen so quickly? America had raw materials. Iron ore from Minnesota. Coal from Pennsylvania. Oil from Texas, discovered in 1859 in Pennsylvania, then later Texas. Copper from Montana. Timber from the Pacific Northwest. But raw materials alone do not create industrial power. Russia had vast resources and remained backward. The difference was systems again. America built integrated industrial complexes. Andrew Carnegie did not just mine iron. He owned the mines, the railroads that transported, or the steel mills that processed it, the ships that delivered finished steel. Vertical integration meant eliminating inefficiencies at every stage. D. Rockefeller did not just drill oil. He built refineries, pipelines, distribution networks. He controlled the entire supply chain from wellhead to kerosene lamps and eventually gasoline stations. This was not possible in Spain, where rigid guild systems and aristocratic contempt for commerce prevented such innovation. Spanish nobles considered trade beneath them. American industrialists gloried in efficiency. Spain's social structure inhibited economic dynamism. America's relative classlessness unleashed it. A poor boy like Carnegie, born in Scotland, immigrated at age 13, could become the richest man in America. In Spain, he would have died poor. By 1900, America was producing more steel than Britain and Germany combined. It was manufacturing more goods, exporting more products, building more factories. The energy was unstoppable, and it was all based on systems that multiplied productivity, not on treasure extracted. From mines, Wall Street became the world's financial center, not by accident but by innovation. American finance developed instruments Spain never imagined. Corporate bonds allowed companies to raise capital from thousands of small investors instead of depending on a few wealthy aristocrats. Stock markets allowed ordinary people to own shares of enterprises, creating a distributed ownership model that aligned incentives across society. Futures markets allowed farmers to hedge risk and plan production rationally. Insurance markets allowed businesses to take calculated risks, knowing catastrophic losses would not destroy them. Each innovation increased the velocity of capital and reduced friction in the economy. By 1900, J.P. Morgan could mobilize more capital in a week than the Spanish crown controlled in a year. And this capital was not sitting in a vault. It was circulating through the economy, creating value with every transaction. Morgan organized a financial consortium that bailed out the U.S. government during the Panic of 1893. A private banker had more liquidity than the Federal Treasury. This would have been unthinkable in Spain, where the crown monopolized finance and bankrupted itself repeatedly. American financial innovation also created stability through diversification. When one sector crashed, others remained healthy. When agriculture struggled, industry thrived. When railroads failed, banks survived by holding diverse portfolios. Spain's system was binary. Fleet arrives or fleet fails. Prosperity or bankruptcy. No middle ground. No resilience. American finance created shock absorbers. The system could bend without breaking. By 1900, America had rapidly expanding university system with land-grant institutions in most states. Public education was widespread. Literacy rates exceeded 70% among white population, though significantly lower for African Americans due to systemic discrimination. Spain's literacy rate was below 36%. Why does this matter? Because education is infrastructure for the mind. An educated population can read contracts, understand complex instructions, innovate, solve problems. Spain kept its population ignorant to maintain control. The Inquisition banned books. Universities taught theology, not engineering. Social mobility through education was nearly impossible. America did the opposite. The Morrill Act of 1860 created land-grant universities in every state to teach agriculture, engineering, mechanical arts. These were not elite institutions for aristocrats. They were public universities for farmers' sons and some immigrants' children, though access remained limited by race and gender. The result was an explosion of practical innovation. Agricultural science increased crop yields. Engineering graduates designed better machines. Business schools taught systematic management. Each generation was more capable than the last. By 1920, America had a rapidly growing population of engineers, though exact comparisons to Europe are difficult. It had leading institutions producing scientists and researchers and inventors. Thomas Edison held over 1,000 patents. Alexander Graham Bell invented the telephone. The Wright brothers achieved powered flight in 1903. Henry Ford revolutionized manufacturing with the assembly line starting around 1913. These were not aristocrats. They were tinkerers, mechanics, self-taught geniuses. America's system allowed talent to rise regardless of birth, though significant barriers based on race and gender persisted. Spain's system wasted talent by trapping people in the class they were born into. Human capital is the ultimate resource. America cultivated it more effectively than most nations, though imperfectly. Spain squandered it tragically. World War I and World War II were European catastrophes. But they were American opportunities. When Europe tore itself apart from 1914 to 1918, America initially supplied all sides until entering the war in April 1917. Before American entry, British needed steel. French needed grain. After entry, America focused on allied powers. Americans sold to everyone initially. The war economy supercharged American industry. Factories ran triple shifts. Shipyards launched vessels at unprecedented rates. Farmers expanded production to feed Europe. By 1918, America had transformed from debtor nation to creditor nation. European powers owed America billions. The gold that Spain once extracted from Americas now flowed to American vaults as payment for goods. World War II repeated the pattern on an even larger scale. While Europe and Asia burned, America became the arsenal of democracy. Lend-Lease, starting in March 1941, sent weapons, food, vehicles, aircraft to Britain and Soviet Union. American industry produced approximately 2.4 million trucks, over 300,000 aircraft, and 89,000 tanks during the war. The scale was unimaginable. And after the war, Europe and Japan lay in ruins. American cities stood intact. American factories hummed. American economy was larger than the next several major economies combined. At Bretton Woods in 1944, America designed the post-war financial system. The dollar became the global reserve currency. The World Bank and International Monetary Fund operated from Washington. America had achieved what Spain never did despite a century of treasure fleets. It controlled the global economic system. Here is where the story becomes ironic. Remember how Spain flooded Europe with silver and triggered inflation that destroyed its own economy? America did something similar, but with a crucial difference. After World War II, the dollar was backed by gold at $35 per ounce. Other currencies were pegged to the dollar. This was the Bretton Woods system. It made the dollar as good as gold. But in August 1971, President Nixon ended dollar convertibility to gold. The dollar became fiat currency backed only by faith in the American economy and government. This sounds like Spain's problem. Currency backed by nothing but government promise. Except America had what Spain lacked. The most productive economy in history. The most powerful military. The most innovative technology sector. The most liquid financial markets. When you hold dollars, you are holding a claim on the greatest wealth-generating system ever created. Spain's silver was valuable only as metal. American dollars are valuable because they grant access to American goods, services, markets, legal system stability. The dollar became the global medium of exchange not because America had gold but because America had systems. Today, approximately 60% of global foreign exchange reserves are held in dollars as of 2024. International trade is conducted in dollars. Oil is priced in dollars. The dollar is the modern equivalent of Spanish silver flowing through global economy. But unlike Spain, America does not suffer crippling inflation in normal times because dollars are backed by productivity, not just by printing presses. When America creates dollars through Federal Reserve policy, those dollars circulate through the most dynamic economy on earth. They chase goods, services, innovations. Spain created silver but produced little else, so prices exploded. America creates dollars but also produces technology, entertainment, pharmaceuticals, aircraft, software, financial services, agriculture. The difference is everything. If Potosi was Spain's silver mountain, then Silicon Valley is America's gold mine, except it never runs dry. Technology creates infinite wealth because digital products have near zero marginal cost. Microsoft develops Windows once and sells 1 billion copies. Google builds a search algorithm once and serves billions of users. Facebook Now Meta creates a social network once and connects 3 billion people. Each additional user costs almost nothing but generates advertising revenue. This is wealth multiplication that Spanish silver miners could never imagine. American tech companies are worth trillions. Apple's market cap has exceeded $3 trillion at various points. That is more than Spain's entire annual GDP. Microsoft, Google, Amazon, Meta, Nvidia, Tesla. These companies create more wealth in a decade than Spain extracted from Americas in a century. And this wealth is not sitting in vaults. It circulates. Tech employees earn high salaries and spend locally, creating jobs in restaurants, real estate, services. Tech companies invest in infrastructure, data centers, research. Shareholders receive dividends and capital gains that get reinvested. The velocity is extraordinary. Spain's silver created wartime wealth. American technology creates perpetual wealth engines. And technology attracts global talent. The smartest engineers from India, China, Russia, Israel, they all come to Silicon Valley. America imports human capital the same way Spain imported silver, except human capital appreciates instead of causing inflation. A brilliant engineer creates products worth billions. An ounce of silver just sits there. By dominating technology, America has created a structural advantage similar to what it built in the 19th century with infrastructure and industry. Other nations can copy, but America maintains the lead through network effects. The best talent wants to work where the best companies are, which attracts more talent, which creates more companies. It is a self-reinforcing cycle. Spain never built anything self-reinforcing. Its wealth was extractive and finite. Spain used military force to extract resources. Conquistadors conquered Aztecs and Incas to seize treasure. Spanish Armada tried to dominate trade routes by force. This is expensive and ultimately futile because conquered people resist and suppression costs compound. America uses military power differently. Not primarily for extraction but for system protection. The U.S. Navy patrols global shipping lanes, ensuring free trade. This benefits everyone but especially America because American companies dominate global trade. The dollar's status as reserve currency is backed by American military power. Oil producers price in dollars partly because America guarantees security in Middle East, though this relationship is complex and debated. This is not conquest. It is hegemony. The difference is subtle but profound. Spain conquered and extracted until nothing remained. America creates a system where cooperation is more profitable than resistance. Countries that integrate into American-led order prosper. Japan, Germany, South Korea became wealthy by joining the system. Countries that resist, like Soviet Union or North Korea, stagnate though causes of their economic problems are multifaceted. The genius is that the system is voluntarily attractive though backed by military and economic pressure. Spain forced compliance and bred resentment. America makes compliance profitable and breeds dependence. Today approximately 750 U.S. Military bases or installations in over 80 countries project power globally. But they also protect the economic order that benefits America. When shipping lanes are secure, global trade flows. When trade flows, American companies profit. When American companies profit, the dollar stays strong. When the dollar is strong, America can borrow cheaply. When borrowing is cheap, America can invest in military. It is a loop that reinforces itself. Spain's military consumed wealth. America's military protects the system that generates wealth. That distinction is why one empire faded and the other dominates. Here is the most ironic parallel. Spain went bankrupt 4 times in 50 years despite having the world's largest treasure fleet. America has over $35 trillion in national debt as of 2024 and remains the most powerful economy on Earth. How is this possible? Because Spain borrowed against future silver shipments but produced nothing. When fleets were captured or delayed, Spain defaulted. America borrows against future productivity of the most innovative economy in history, U.S. Treasury bonds are considered among the safest investments on Earth. Why? Because most investors believe America will keep producing wealth. The full faith and credit of the United States is backed by Silicon Valley, by Hollywood, by Wall Street, by agricultural heartland, by military dominance, by the dollar's reserve status. Spain's credit was backed only by hopes that ships would arrive safely. Moreover, America borrows in its own currency. When Spain borrowed from German bankers, the debt was in foreign currency. Spain could not print German florins. If it could not pay, it defaulted. America borrows in dollars. In theory, it could print dollars to pay debt. This creates moral hazard but also means America will never involuntarily default. Creditors know this. So they keep lending. At relatively low interest rates, historically speaking. America pays varying rates but has historically paid less than 5% interest on 10-year bonds over the past decade. For a debtor with over $35 trillion in debt. That is remarkable. It is also a testament to systemic strength. Spain's debt was a noose. America's debt is a tool. Used properly, debt finances infrastructure, research, education that increase future productivity. Used poorly, debt funds wars and consumption that produce nothing. America has done both. But the productive investments have been sufficient to keep the system growing, for now. But here is where the story gets uncomfortable. Because America today shows some symptoms Spain showed in its decline. America consumes more than it produces. Trade deficits have persisted for decades. America imports goods from China and pays with dollars that China then uses to buy treasury bonds. This works only as long as everyone believes in the dollar system. Spain consumed imports from Italy and Netherlands and paid with silver. That worked until the silver ran out. America manufactures less than it used to. Factories moved overseas. Rust Belt cities hollowed out. Finance replaced industry as the economy's core. This mirrors Spain's transition from production to rent-seeking. Spanish nobles lived off colonial tribute instead of building enterprises. American elites live off financial engineering instead of making things. Inequality has reached levels not seen since the Gilded Age. The top 1% own more wealth than the bottom 90%, though exact percentages are debated. Spain's wealth concentrated in aristocracy while peasants starved. Similar dynamics today breed instability. Infrastructure is crumbling. Bridges collapse. Power grids fail. Water systems poison cities as seen in Flint, Michigan. Spain built cathedrals instead of roads. America builds financial instruments instead of fixing pipes. Education quality is debated with some metrics showing decline. Test scores in some areas have fallen. Universities cost fortunes and deliver debated returns. Spain kept its population ignorant. America is allowing educational inequality through neglect rather than design. These are warning signs. Not predictions of collapse but indications that the systems which built American wealth require maintenance and renewal. Yet despite the warnings, America retains advantages Spain never had. America is still among the leaders in technological innovation. Still one of the most productive large economies. Still attracts much of the world's best talent. Still controls the most powerful military. Still issues the reserve currency. These are compounding advantages. Spain's advantage was silver, and silver was finite. When mines played out, Spain had nothing. America's advantages are systematic and self-reinforcing. Innovation attracts talent, which creates more innovation. Dollar dominance enables cheap borrowing, which funds research that maintains dominance. The question is not whether America will collapse like Spain. The question is whether America will learn from its own history the same way it learned from Spain's. Spain confused treasure with wealth. America understood that systems create sustainable prosperity. But systems require maintenance, investment, adaptation. Spain became complacent. Assumed silver would flow forever. Never diversified, never innovated, never built resilience. America risks the same complacency. Assuming dollar dominance lasts forever. Assuming military power guarantees economic strength. Assuming past success ensures future prosperity. History does not repeat, but it rhymes. The pattern is clear. Nations that confuse current wealth with permanent advantage decline. Nations that continuously invest in productive systems adapt and thrive. Spain had the greatest head start in history and squandered it. America built wealth from nothing and became a superpower. The difference was wisdom. The question now is whether that wisdom persists, or whether America will learn what Spain learned too late. That empires built on extraction and consumption eventually collapse, while systems built on production and innovation endure. History gives answers, but only to those wise enough to listen.